of business today, set out in the notice of the annual general meeting, contains 26 resolutions, of which shareholders are asked to vote. And we also have contained in that notice explanatory notes as well. Now, ladies and gentlemen, given that we are a UK registered company, all these resolutions are matters typically sought in annual general meetings of UK public companies. And you may notice, therefore, some differences compared to the usual practice that you see in Australian companies and indeed Australian AGMs. For example, in accordance with the UK Corporate Governance Code, all directors here today will be seeking election or re-election at this meeting. The board also seeks authority from shareholders in accordance with UK legislation again, the Companies Act, for the group to incur political expenditure or make political donations. Now, we did actually have a comment on this at the last time we were at the AGM actually in Melbourne 2 years ago. So I would like just to stress that CYBG's policy is not to make any political donations or incur political expenditure within the ordinary meaning of these words. However, it is usual practice for UK-listed companies to seek a resolution of this type because of the wide definition of donations and expenditure contained within the Act. So, for example, this can mean that activities which form part of regular operations of CYBG, such as communicating with government at local or indeed national level, and funding events to which politicians are invited, that would be covered. And so this authority being requested is a precautionary measure to ensure that the group does not inadvertently breach the Act. Another point for you to keep in mind is that when we turn to questions and the resolutions that are going to be put before the meeting today, I will ask for questions on all resolutions rather than taking each resolution individually. And finally, when we refer to amounts of money this morning, we are of course talking in sterling pounds and not, of course, Aussie dollars. Now, 2018 has been another year of really significant progress and transformation for your company, CYBG. We've continued to deliver on the organic strategy we set out at our IPO and delivered on our financial targets for the business. At the same time, we have delivered the Virgin acquisition. Now, this was the group's first acquisition. Indeed, it was the first major public acquisition in the UK since the financial crisis. We were, of course, able to consider the acquisition because of the substantial positive progress we've made since the IPO, and because of the compelling strategic and the financial rationale of the combination of CYBG and Virgin Money. Now, I'm always keen to underline the contribution that our colleagues have made to the success of our business. Every single one of them. And this is so no different this year. The hard work and focus really of so many, deliver our existing strategy, as well as successfully completing this first major acquisition in the public markets. It has been, frankly, impressive and gives me great confidence we have the right team in place to lead us through the next phase of our transformation. The Virgin acquisition transforms CYBG into a standout competitor in the UK banking, able to offer customers a true alternative to the large incumbent banks. Ladies and gentlemen, we are now the UK's 6th largest bank, with total assets over £80 billion, and again remember that is in sterling, and 6 million personal and small business customers. CYBG already has genuine full-service retail and SME propositions supported by strong technology and a deep embedded customer-focused culture. With Virgin Money, we will now have a national iconic brand and a UK-wide network, and a really broad range of products and services for our retail and business customers. In short, the acquisition offers a significant opportunity for the group. Our continued delivery means I am pleased to announce that the board is recommending the payment of an increased ordinary dividend of 3.1p per share. Now, last year we announced our inaugural dividend, and I am delighted we are delivering on our promise to generate and distribute a sustainable return on our equity for our shareholders by crediting this dividend this year. What's more, the board and I are confident we can deliver on our progressive dividend ambitions going forward. Now, of course, despite all this really good progress, your board and I are really conscious of how the stock has been performing over recent months. A number of you actually mentioned that just as we were mingling with you at the start, just before the meeting started. Now, firstly, there have been, in this context, significant currency movements, and that has impacted the Australian dollar share price in particular. Now, if you strip out the decline in sterling since the IPO in 2016, the share price, in fact, up around 4%. And this compares well to other large UK banks who are down in the range of 1 to 7%, with Australian banks down some 8% over the same period. Now, secondly, all UK banks have suffered significant share price declines in the back of the recent deterioration in the UK macroeconomic outlook, principally in light of the uncertainty created by the Brexit negotiations. We've seen also some company-specific impacts in the way in which the company has traded recently. It's clear that trading has been affected by a weaker outlook of the group's net interest margin in 2019, which is all in the context, once again, of the continuing Brexit uncertainty and increasingly competitive mortgage market in the UK. But I say to you, notwithstanding these factors, the group is currently trading at levels broadly consistent with our large UK peers, banking peers. Underlining recent performance is not just a CYBG issue. Now, while we recognise recent share price performance is not good, the board does not believe the current share price reflects the value inherent in the business and the significant opportunity from the combination. Our Capital Markets Day in June will allow us to more clearly articulate the strategy and the long-term financial targets to help the market start to appreciate them. Of course, we continue to operate in a relatively uncertain environment as the UK government continues, and I think it's the right word, to grapple with the challenges of delivering on Brexit. And I don't know how many of you were up early this morning, but the news, I'll update you a little bit on the news coming out of the House of Commons overnight. Following the vote in the House of Commons, I'm afraid we are still expecting a degree of uncertainty continuing as the group government now seeks to agree an arrangement by which the UK can actually leave the European Union in March. Actually, what has happened is that the Brady Amendment has been passed by, I think, 16 votes just a few hours ago, which means Theresa May will now go back to Europe and try and negotiate around the Irish backstop. And so we'll wait to see how that happens, and everyone returns to the Commons again for another vote on the 13th of February. So I'm afraid, as I mentioned earlier, uncertainty remains, but I just thought it might be useful that you heard that breaking news. So whatever the next stage of the Brexit process may be, the ultimate outcome of the negotiations, we believe that this current economic uncertainty surrounding the UK, and indeed the resulting market pressures impacting UK banks, is of a short-term nature. And the board believes the progress we've made through our organic and inorganic strategy creates a positive outlook for the group and means we offer significant opportunity for shareholders. So what I'd like to do now is to hand over to our Chief Executive, David Duffy, who will provide you, ladies and gentlemen, with a view of the business. Over to you.
Thanks, Jim, and good morning to everyone in Australia, and good evening to those of you joining our webcast from the UK. As Jim has outlined, we're facing short-term challenges in the UK market, and we've all been a bit disappointed with the impact on the group's share price. However, I believe in the fundamentals of the group, and in particular the strategic merit of our acquisition of Virgin Money, So I would like to use this time now to provide a brief reminder on the strategic progress the Group has made over the past 3 years and confirm the exciting long-term opportunity ahead of us now that we have completed the acquisition of Virgin Money. Following our IPO back in February 2016, we outlined a 3-year plan where we promised to deliver sustainable customer growth, to reduce our cost base and to optimize our capital base, all while transforming our digital capabilities. So how do we feel we've performed up to the end of financial year 2018? Turning first to customer growth, we have delivered an above-market 6% compound annual growth rate in our mortgage and SME lending over the past 3 years. This demonstrates our ability to take share from other players, and we are on track to meet our goal of 6 billion of lending over 3 years to the end of 2019. Again, all these numbers are in sterling. We have funded the majority of this growth through customer deposits, building on our strong current account base across retail and SME, and utilising our diversity of funding sources. Turning to efficiency, we committed to deliver over 100 million of net reductions in our total cost base by year-end 2019, and we are running ahead of target. Our cost-to-income ratio has reduced from 75% to 63% over the past 3 years, and we expect this trend to continue going forward. The success of these combined initiatives means we have delivered an underlying return on tangible equity of 10.6% in 2018, and this is in line with our target for double-digit returns. We have also begun our journey of providing a sustainable return on equity to our shareholders with our first few years of dividend payments. In October of last year, we also announced the successful receipt of IRB accreditation for both our mortgage and SME portfolios, and we remain focused on further optimising our capital position, and we will continue with the IRB application for our unsecured personal lending portfolio as well. From a performance perspective, I'm really quite pleased that we have delivered on the majority of the targets we set and all of them ahead of schedule. The successful completion of our standalone plan has enabled us to now take the next strategic step, as Jim mentioned, of creating the first true national competitor to the status quo in the UK. And we're really excited about the opportunity that the Virgin Money acquisition represents. Firstly, we now have an iconic national consumer champion brand in Virgin Money, and it benefits Virgin's 99% brand awareness in the UK. In the UK, the Virgin brand is very much seen as an aspirational brand that targets the premium end of the market. It has a huge affiliation amongst our customers. Therefore, when you combine this strong brand with the platform and capability we've built, I think you get a genuinely differentiated proposition in the marketplace. In addition, we will now be able to offer a full range of products and services to a combined 6 million customer base. We also have the opportunity over time to create a partnership model that enables us to offer a wide range of other Virgin Group services to customers. These include health clubs, holidays, broadband, media and travel, to name but a few. Our leading regional SME franchise is also primed to be scaled nationally by utilising the RBS alternative remedies package schemes. In simple terms, we expect to be able to attract tens of thousands of new customers, SME customers, to our platform, and we hope to obtain a funding grant from the government of between 60 and 120 million sterling to support our future growth. In summary, we're the only realistic challenger who can break through the critical 5% market share threshold to provide a genuine challenge to the big 5 banks. So, in summary, we have an iconic national brand that has ubiquitous UK recognition without any negative association to past banking scandals. We now have sufficient scale products and services to be competitive, and we will deliver those services to 6 million customers through a national distribution platform. We have a brilliant digital platform and data mining capability, and the combined benefit will be deployed across our retail and SME customer base. We have an opportunity to significantly expand our SME platform and become a scaled national competitor with a great digital offering. We will also be able to offer many of the benefits, as I've said, of other Virgin Group products when we are developing our proposition model. And importantly, this will give us a low-cost customer acquisition capability. Uniquely, we will be able to acquire customers by tying all of this together with a prospective Virgin Group loyalty program which is under development. No other bank in the UK can replicate the innovation, diversity of product and proposition delivery that this combination will deliver. I believe we are extremely well positioned to deliver on our ambition to become the first true national competitor to the status quo in the UK. The combined group is off to a good start, and we will update you on the initial progress we have made in our Q1 trading statement, due to be released next week on the 6th of February. Finally, we will be conducting a Capital Markets Day in June of this year. We will spend time explaining in detail the combined group's future strategy and share the medium-term performance targets for our business. I will now hand you back to Jim, who will conduct the formal business of the meeting. Thank you.
Thank you very much, David, and ladies and gentlemen, that concludes our business review of the company. Ladies and gentlemen, I would now like to commence the formal business of the meeting, as set out in the notice which you all received, the annual general meeting dated the 6th of December 2018. With all of your consent, we will take the notice convening the meeting as read. Everyone content with that? Thank you for that. Thank you. This is now your opportunity, ladies and gentlemen, to ask your questions on the resolutions. We've actually got 26 resolutions there, so it's your opportunity now to ask questions on these. As a reminder, we'll take questions on all resolutions, and this will be the only opportunity you have in the meeting to ask these questions. This is also the opportunity to ask any questions, of course, that you've posted in the question box before the meeting started. And on your way in this morning, you were all given various cards, a coloured card. If you were given a light blue, dark blue, or indeed green card, then you may ask questions. Please keep your questions restricted to the matters relevant to the business before the meeting, and indeed the resolutions, the 26 I mentioned earlier in the notice. Should you wish to ask a question, please go to one of the two microphones and show your cards. You can see the microphones at either side here, just halfway up in the auditorium. When it's your turn, I'd be very grateful if you could state your name to the attendant, who will then introduce you before you can, of course, ask your question. And if you're here today as a proxy or a corporate representative, also provide the name of the individual or organisation you represent to the attendant before asking the question. So may I please have the first question?
Chairman, I would like to introduce Craig Caulfield.
Okay.
Thank you. Thank you, Chairman. Thank you, Board. I've travelled from Queensland, 2,000 kilometres, driven for 3 days getting down here, so I appreciate you allowing me to put questions to you.
Driven?
I represent a group in Australia of bank warriors, so not particularly with your bank, but we have formed some alliance with a couple of bank warriors, I would call them, from the UK. Firstly, let me thank David Duffy, because he came out this morning and was very open and candid in talking with us and being open and, you know, saying he was happy to field questions. So thank you, David.
Yes, we're delighted to do that. Yes.
Yeah, I have 3 questions. If you want to take them separately to allow someone else, that's fine. If you want me to continue, you let me know.
Yes, just let's just start. Fine.
Here we go. My first question is regarding model litigant. I'm not sure if you're aware of that in the UK, but in Australia, a model litigant is someone that will make a series of commitments when they're dealing with perhaps a self-representing litigant with legal matters, court proceedings, etc. My case is with the Commonwealth Bank in Australia, so it's not to do with you, but these issues are across banks worldwide. I've found, and other bankers have found that many of the banks have made it very hard to deal in a fair, ethical or moral manner. Now, these things are often the boards, the management can do things legally compliant, but not morally and ethically compliant. So someone that doesn't have financial resources or legal expertise can be treated very harshly. The banks can delay proceedings. They can bring in, overpower with expertise. I'm wondering from the board, do you have a policy to say we will act ethically, morally, and as a model litigant? It doesn't prevent you from protecting your position that you have to do in certain circumstances where you might have to repossess a farm, a home or a property. It's simply saying we will deal in an ethical and moral manner. Could I have some feedback on that, please?
Of course you can, Mr. Caulfield. In answering that, I would just quite simply say that we have a policy and everything we endeavour to do at all times, and clearly to act professionally when we are engaging with customers at whatever situation it is, and without question the points that you're really emphasising on the ethics of this and the morality, absolutely at the heart of what we endeavour to do at all times in this business is in fact to be as individuals and collectively is to act in a hugely moral way and in the right ethical ways. It's very, very important. We actually believe, expanding this slightly further, we believe passionately that is a competitive, at the end of the day, that's how you become, this is the essence of the relationship with our customer, and we want to at all times operate in the way I've just outlined, because I think that can bring about huge competitive advantage. So we believe in that passionately.
Okay.
And words are words, and you've got to follow it up with action, and that's absolutely what we as a board, individually and collectively, seek at all times to do.
Yeah. Can I take that as an undertaking?
It's what we, Mr. Caulfield, it's what we do. So you can, yeah, absolutely.
Okay. My second question, will I proceed to that, or is there anyone to elaborate on?
No, I'd like to, let's just, I think, yes, just cut, yeah, I think you're good.
Okay. My second question relates to, in Australia we call it BEAR legislation, which is Banking Executive Accountability Regime. I think, and correct me if I'm wrong, in the UK it's Senior Management Certification Regime.
We normally call it, Mr. Caulfield, the SMR regime is the acronym, it's Senior Managers Regime. Yes, exactly.
Yes, okay. I get mixed up with the acronym sometimes,
No,
I'll spell it out a little. Is this regime a regime where executives are accountable? Is that made public? Is that just simply kept within the board, or is it available publicly so that we can all see who the accountable persons are?
This is actually a regulatory requirement, so indeed you can access the regulatory website, and all these are absolutely visible and open and totally transparent. So you could actually choose after this meeting to access that and find the SMR responsibilities for every single individual in the board. That's not just unique to CYBG, that's industry-wide in the UK.
Yeah, well, congratulations to the UK industry. Australian banks take note, please. Okay, my third question is, throughout the world now, banks have many satisfied customers and many unsatisfied or aggrieved customers. Perhaps a lot less aggrieved customers and a lot more satisfied customers. But nonetheless, the aggrieved customers are making themselves heard around the world. What we've found in Australia is that often the banks put out a lot of statistics around satisfied customers. But trying to get to the root causes of what's gone wrong in conduct risk and operational risk, surely the fastest way is to talk to aggrieved customers, to talk to those that have experienced problems deeply, long-standing, first-hand. Does the board have a policy where the directors of the board, the chair, the CEO, talks with aggrieved customers? Not any customers, not those exiting a bank. How are you going? How are you finding the experience? But those that have difficulties.
Well, look, generally, obviously, we try to connect with all customers, throughout the institution, from the board right the way down. But I think what I'd like to do actually is just bring in my chief exec on this, actually, because David, as all of us, are passionate about the relationship with the customer, and David indeed does interact on a very regular basis with customers with good news stories usually too, but also there are inevitably in life be some customers who aren't. So David, do you want to just maybe
Sure, Chairman.
put some more colour on that?
And thanks, Craig. And I might have mentioned a little bit of this earlier in chatting with some of you. I think a bank learns from where it's failed, where it's not delivered, not from what the good news stories are. we've all seen that even in the best endeavours world, there will be failures, there will be things that didn't get done right. And I just have a belief in standing up and being transparent and addressing those, and that means meeting with aggrieved customers. What we've done is created a little bit more science than that. So we've created a conduct framework within the bank, learning the lessons of the past years, which is very detailed and very clear around accountability across the bank, and to your earlier point, lined up to the individual regulatory accountabilities as prescribed in our chairman's conversation. So very, very clear policies and practices with very clear accountabilities. And then on top of that, I receive an analysis of all complaints. I call customers, I go see customers, I travel around the country and see customers, and particularly those who we feel we have challenges with, as do the rest of my leadership team. That is all reviewed on a frequent basis at the entire board as to performance issues, themes, because I think the important point you made is it's not about just the individual complaints, it's about themes which might give you an underlying cause for concern in the bank. So it is a holistic approach, probably based on the best of lessons learned in the past, where you take process and policy and accountability and you apply it to the real world of speaking to your customers. And I think that serves us well, and I think the most fruitful meetings I've had have been those where we've resolved matters which had otherwise been cause for concern.
Thanks, David. So yes, absolutely, you have the policy, and as David outlined, the sort of practical approach that we really deal with this issue in a sensible way.
Thank you. Well, I appreciate that. I'd have to say I hear similar voices from boards and chairs and executives in Australia, and from our Australian experiences, I still find that it's incredibly hard to get through. With the Commonwealth Bank, Mr. Common, the CEO, has said you can personally write to me now if there is anyone out there, and he's met with myself and many of us now. Is that something that Mr. Duffy or anyone on the board would commit to, saying that if someone has a long-standing case, that despite all the good things that you've said, that if there's an aggrieved customer with a long-standing case, you'll say, yes, we will meet with you at this high level?
We encourage, the answer is we try and encourage as much dialogue and as absolutely possible. So in principle, I would say,
I think what I would say, Craig, is that is the practice we adopt right now. It is a practical matter of how you cover the number of customers you would have for different lengths of periods, etc. But either myself, the other board members, or my top team, that's the group of people that we deploy and endeavouring to create that outcome. So absolutely.
Okay. Thank you very much.
Well, many thanks for these insightful questions.
Good morning, Chairman.
Good morning, Mr. Sweeney.
Thank you. At the time of the demerger from the National Australia Bank, the National Australia Bank provided £1.7 billion to cover legacy conduct issues. It would appear that amount was seriously underestimated, since that amount has been depleted. Will the board and Mr. Duffy be seeking additional funding from the National Australia Bank, given that that original $1.7 billion was probably a serious underestimate at the time?
Well, the answer to that is that was agreed, you rightly say, at the time of the demerger back in early 2016, and the answer is we cannot and will not go back. You cannot go back to National Australia Bank on that.
You'd not be prepared to test that in court?
Well, there's no legal. The agreement is the agreement is for that, and so you can go back, but it won't do any.
Yeah, just to add to that, John, I think the way that worked was it was a legal agreement as part of the separation, including with the regulators who had to sign off and actually determined the amount. Yeah. So pulling those three together, that was enshrined in the legal documents around the separation. And sadly, I would love to be able to go to anybody for more of those funds, but it's not possible under the contract that we have, unfortunately.
So there is really, the answer is there is no recourse.
Okay, thank you for your answers. Thank you.
Okay, super. Thank you for your question. I'm looking around.
Chairman, I would like to introduce Tony Di Donato, representing Australian Bank Warriors.
Okay.
Thank you, and welcome to Australia, Board and Chair.
Yes.
My question points to the share price and its resilience. We're in an era of misconduct being daily news around the world in the banking sector, and it seems that every day there's more of these stories coming through, and especially legacy cases. we tend to share quite a similar history. The Australian banking and also the UK banking, in there seems to be like a decade worth of legacy cases that are, in my personal experience, not being handled in any way to fruition. How resilient is the share price of the bank, given that there are so many legacy cases that have yet to be settled?
Thank you very much. Look, I think we are well, in the UK, we're well through the regulatory process around legacy conduct matters. So, I mean, perhaps more advanced than in Australia, for instance. This has been really intense period of activity, and we really are well through that. I think the Finance Director, CFO, Ian, touched on this earlier, actually, but I'm happy to hand over to Ian again in terms of just the actual specific provisioning. Ian, do you want to talk on that?
Yeah. Tony, I think one of the differences between this bank and the Australian banks is the stage we're at in terms of dealing with legacy issues. CYBG has been seeking to redress some of the problems of the past very actively for a number of years now. And what's encouraging for us is that everything we're dealing with is towards the end of the process, and we have, as far as we're aware, unearthed and addressed all of the matters that relate to those legacy issues. So while we still, from time to time, have to take charges through our income statement in order to meet the cost of those liabilities, they relate to matters that are well in the past and well progressed in terms of how we're dealing with them. And we have regular conversations with our shareholders in Australia and the UK about the way we've approached providing for those liabilities. And so I think the matters are well understood. And in those circumstances, to your question about resilience of share price, I think understanding of that is important.
Okay, so I hear that no hidden surprises in the near future?
That's correct.
Correct.
Okay, thank you for your time.
Thank you. Thank you for your question. Next question.
Chairman, I'd like to introduce Ian Lightbody as proxy for Hargreaves Lansdowne Limited.
Good morning, Mr. Chairman. Do you mind if can I use your lectern, please? I've got my iPad and it's a wee bit difficult. Would you mind awfully if I use your lectern? Thank you.
What? Well, okay. Okay.
Thanks very much.
I'll stand next to you, but not on
That's good. You can still get picked up. Good morning, ladies and gentlemen. Thank you, Chairman, for allowing me to address the meeting. I don't want you reading my notes.
No? Okay. I'm looking straight ahead.
The first thing I would say, and I have actually lodged my questions in advance, is that I, like others here today, are probably a wee bit amused that we're mentioning sterling markets. We're a UK bank, you're a UK bank, and here I am, 10,541 miles from my home, and I live within 13 miles of headquarters in Glasgow. So anyway, it's a nice, beautiful city, and I'm glad to be here. Just as an introduction, I represent the NAB Customer Support Group, which we have 200 members, banking members, and we have 140 fixed rate tailored business loans within the 200 members. There's 30 or so variable rates, and the rest are a mixture. The fixed rate tailored business loans that we have had a book value of £213 million, which is an average of 1.53 million each. So when surveyed, our members actually said that 20,362 direct job losses, with countless others in the supply chain, occurred because of these tailored business loans. Anyway, this brings me to my first of my questions, and if you wouldn't mind, I may address this to David Duffy, the CEO, who sits on the board of the UK Finance, as did his predecessor, Mr. Thorburn, and that's David, not Andrew. So, Mr. Duffy, you're aware that the British Banking Association mission statement from 2015 to 18 has expired, encourages many things, and it includes building alliances with customer groups and supporting vulnerable customers. Contrary to what you said earlier, we have no record of any attempt of you implementing such practices, and your record so far of resistance and of obfuscation. There is a perception that has been put out that we are a diminishing bunch of courts. On the contrary, we are not diminishing. In fact, we've taken 5 new members in the last week, with loans to a value of £40 million. It is particularly sad where customers with mental health issues and physical health issues, and no cognizance is taken of this when, for instance, the lawyers we mentioned earlier are appointed. As you're aware, there has been a recent string of letters from the APPG for Fair Business Banking in Britain to the Financial Conduct Authority, and they have responded. You're aware of that? The letter from the APPG to Andrew Bailey.
Yes, we are aware of that.
One of the suggestions made was that to prevent anything protracted correspondence back and forth, all parties would meet.
Yep.
And this would be under Kevin Holland's chairmanship. I can confirm to you now that of the 5 invited participants being the FCA, the FOS, ourselves and our customer support group, and the APPG, you're the only ones now to confirm. So my first question, therefore, is, will you publicly confirm your willingness to participate in such a meeting?
Yeah, I think we would absolutely be directed by any of those bodies to have a meeting if the FCA thinks we should have a meeting. Of course we would.
So we'll all sit down at the table, 5 of us, and see if we can get some of these things. That's fantastic. I appreciate it.
There is a key point on your side. It's not totally within our gift, you know. So I mean, well, if the FCA says no, then we can't do it. But, I mean, we are out to.
I'm in direct contact with Andrew Bailey, and he has said he'll do it.
With many things that we do with the regulators, if the regulator asks us to
do it,
do it, of course we're fully compliant.
Just on that, actually, David Taylor, who you met earlier, and thank you very much for meeting David, is here today, and he sincerely hopes that you'll turn up this time and meet with him. Anyway, legacy issues. It's on record that 2018 it was unprecedented in that 5 bank debates took place in Parliament in the UK, and that was on the subject of banking, and it was all conduct issues, and your bank, unfortunately, figured prominently in them all, and not at all favourably. Here we are in early 2019, and I have to report to you, Mr. Chairman, and your board, that these issues are not going away. So, I'm nearly there.
Yeah, because we want to just. I want to give you time.
Understand.
To be fair, but I also want just clear questions, and we can't dominate on slate.
Okay. Other people have had good time. So, in conclusion, then, Catherine Griffiths is the banking editor of the Times in the UK. She recently wrote, "Australia needs stability in its banking sector. So does Britain. To bring it about, banks everywhere need to do far more to truly act in their customers' interests, as opposed to being as an aggressor or aggressive as possible over issues such as remediation for past wrongs. Will it happen?" she said. "Sadly, I doubt it." This leads me back to you, then, Mr. Chairman. I hope Catherine's pessimism is misplaced, and I will watch with interest hers and others in the follow-up articles on this subject in the coming days. We sense a long and overdue softening of opinion, with hope that perhaps things may finally be on the turn in Britain if the banks, including yours, listen and act. As I said before, there were unprecedented 5 debates in Parliament last year, and finally there appears to be no appetite for any more within Her Majesty's Treasury. The Chancellor, Philip Hammond, issued a statement, a very important and groundbreaking letter on the 19th of January 2019 in relation to this. It was to Stephen Jones at UK Finance, addressing past UK SME disputes and potential solutions. Only last week, and before flying out to this AGM, the CEO of the FCA, Andrew Bailey, encouraged me personally, representing the NAB Customer Support Group, to be part of the steering group being set up to address these backward-looking resolution scheme. It must be recorded also that the Democratic Unionist Party has also been extremely active with the APG for Fair Business Banking, assisting the NAB Customer Support Group. Yet, sorry, just to let you know, there has been recently very good resolution that we hope is on the table, and the Democratic Unionist Party have actually helped here, and they've played a key role in seeking to settle one of the most public debates and disputes for one of our members of the Clydesdale Bank. Yet, in these negotiations, Mr Chairman, there has been some major transgressions by your bank's management with regards to the senior manager and certification regime we mentioned earlier. Finally, Mr Chairman, with the Royal Commission's final report due out tomorrow, many issues exposed here mirror our past and many still ongoing experiences in the UK. We take great support from our fellow bank warrior victims here in Australia. So likewise, will you and your CEO, Mr Duffy, garner whatever support you need from those here in this wonderful country and return to Britain, and rather than being the aggressor, as has been in the past days, months and years, ensure that your bank plays a full and finally constructive role too. In effect, please show that Catherine's well-founded scepticism is misplaced and that banking conduct and culture is finally changing into reverse in the UK. Are you going to endorse this settlement, please, Mr Chairman? Because if otherwise, it will not go away. Thank you very much.
Okay, you can return to the... Thank you, Mr Lightbody. I know you've obviously travelled a long way on this, and you know you've had your say. I'm very happy, actually, incidentally, after this meeting we can have a continue this dialogue. But I would remind those in the auditorium, you know, from when we started this right the way through, we are absolutely committed at this bank to, in terms of delivering on a whole range of things. That includes an absolutely first-class customer service and customer connection, and indeed the right culture. So I just wanted to respond a little bit to that. This is a meeting, of course,